Hello, this is the second part of the beginners level. So we're just going to get right into it. So we're starting with this, which is what is base currency. Now the base currency is the first currency listed in the currency pair. Alright, a currency pair is the combination of two different currency. That's why it's called a pair. Just like your socks, alright, you have left and right socks, and that's why it's called a pair of socks. Bunch of bananas, that's a couple of bananas. That's why it's called a bunch of bananas. So base currency represents one unit of that currency. That's what a base currency actually represents. Now, when you see a currency pair like Euro USD is equals to 1.10. The euro, which is the base currency, means 1 euro is equals to 1.10 US dollars. Remember, in the second definition, it says it represents 1 unit of that currency. So base currency is the first in a currency pair. So what is a currency pair? Currency pair is when there are two currencies together. For example, Euro USD. So that means the base one is the first. So that means the first is euro, and it represents 1 unit of that currency. So that means a base currency is actually representing 1 unit of euro. So if it says the euro is the base currency, that means 1 euro according to the 1.10, because here it says euro USD is equal to 1.10. That 1.10 is the exchange rate. That means it's trying to say that 1 unit of euro will get you what? 1.10 US dollars. Now the key point here is that the base currency is the reference for the trade because it's the primary one. Alright. If that pair is going up, that means maybe if it's buying, that means the base currency is strong. And if it is selling, that means the base currency is weak. And that means if the base currency is strong, that means the other one definitely be weak. If the base currency is weak, that means the other one definitely be strong. Alright, that's it. The base currency is the first one, is what we focus on more in a currency pair. Is what we are almost all about in a currency pair. So the core currency. So the first one is the base currency. Obviously, the second one will have a name. So that's the core currency. The core currency, also known as counter currency, is the second currency in a pair. It shows how much of this currency is needed to buy 1 unit of the base currency. Just like we explained earlier, that base currency represents 1 unit of the first currency in a currency pair. So that means the core currency is going to show you how much of that particular second currency is needed to buy 1 unit of the base currency. Base currency represents 1 unit of that currency. Core currency represents more than 1 unit. Well, it actually now depends on the country. Alright, so it's not stable, it's not 1. Base currency is 1. Alright, we're just taking 1 unit of the first currency in the pair. Now we don't know the outcome until we now see the exchange rates. For example, Euro USD is equals to 1.10. That means the USD is the core currency here. So that means it's trying to tell you that what 1 euro costs us 1.10. So that means what we need 1.10 US dollars to get 1 euro. That's what core currency is actually trying to tell you. Base currency is trying to tell you that what you are just needing 1 unit of the first currency. Now the core currency is telling that what you are just going to find how much you need to get 1 unit of the base currency. So the key point here is that the profit and loss are calculated in the quote currency, because the base currency is static. Alright, we're just picking 1 unit. We're just picking 1 unit of the base currency. Unlike the quote currency, it depends. So imagine 1 euro is actually 1.10 USD. So you see that the figure 1 and 1.10, that means that 1.10 is more. So that means that the core currency is having to deliver more just to get 1 unit of the base currency. So that means the core currency is at loss. But let's say for example we're able to make them switch places. Now, like maybe USD euro. Now there is nothing like USD euro. The only one I'm aware about is euro USD. Okay, so let's say we're able to make them switch places. Now, since euro here is the base currency and USD is the code currency, so let's say we happen to switch them. That USD is now the base currency, and euro is now the code currency. Now, in the initial example, euro USD is equals to 1.10. So, and since our profit and loss are calculated in the code currency, that means that what we're spending more US dollars to get just 1 unit of the euro. Remember that for the base currency, we're just calculating 1 unit of it, and the USD now depends on the exchange rate. Now, if we are to swap it, we definitely know that the euro is strong. Alright, we definitely know that the euro is definitely strong. So if euro now happens to be the core currency and USD now happens to be the base currency, so definitely we'll be spending less of euro to get just 1 unit of the US dollar. That's how you calculate your profit and loss. Alright, in the core currency. So that's how you know if you're actually like spending more or you're spending less, right? So this is not actually how it would go. It's just it's just basic examples to it, but this is not what the base and core currency were actually taking us to. But then just so you get the actual point. So to make it simple, the base currency is what you are actually buying, and the core currency is what you are paying with, and that's just it. Since the base currency, we just want to know 1 unit of it, and the core currency is what you are paying with. So just like I said, the profit and loss is calculated in the core currency, right? Because it is what you are using to pay. So that's how you now know if you're actually making more or less. Or let's say, for example, you got a particular mirror for 20k to your hometown. So let's say you traveled to school and you wanted to get another one. So you brought out 20k because that was the price you had in mind. Alright. So and you got there and that wants to be 15. So what you are paying with is your money. So that's how you know that okay, you're spending less this time around. So that's how you calculate your profit, calculate your loss, because you had already zeroed your mind that it has been static that way you were going to get the mirror at 20k, no more, no less. But now you happen to like be spending more. So that means the 20k was already out of the budget. So you never expected that there would be you'll be able to spend less. So now since you're able to now spend less, that means the 5k on top is now your profit. Right? You just get the typical example. So this particular section is very, very long. So I'm just going to break it down to 3 or 2 videos because I don't like to make lengthy videos. I personally prefer to read than watch long videos, and I do not want to bore you at all. So for this section, I'll be stopping here and I'll continue again